Regulators have been increasing focus on customer risk, placing increased pressure on financial institutions and crypto firms to gather richer KYC and contextual data, monitor customer behavior, and intensify their screening sophistication and capabilities. This panel will delve into new guidance and regulatory expectations on managing customer risk. I'm Nick Wakefield, co-founder of Regulation Asia, and I'm delighted to be the moderator for this session. It's my pleasure today to introduce a formidable lineup of panelists to join me.
Thanks, Nick. So, as Neha mentioned, we, from a KYC evolution perspective, we are moving more towards what we call eKYC or digital KYC. And as the industry changes, evolves, we are moving more towards fintechs and digital banks or neobanks, as we call them. More and more regulators are now giving guidance around this. So depending on the local jurisdiction and the local regulators, there are different mechanisms or different ways of doing eKYC.
I think regulators recognize the importance of screening ultimate beneficial owners, as well as, they require companies to comply with stringent regulations as part of their business partner checks. So sometimes these checks can actually reveal who a firm is doing business with and the associated risks.
I think regulator expectation has been rising and will continue to rise over the next few years minimally. Especially for past few years, the reason why it's been rising is that despite all of us, the bank, whether it's fintech or bank, we have come up with sophisticated technologies, how advanced we are, we still see a lot of ML and fraud related issues and a lot of penalties happening. So for FI, we realized that for past 1-2 years, a lot more focusing on outsourcing. And the reason is really for cost effectiveness and also build the center of excellence. The challenge here is that the individuals have been doing the outsourced works could be based outside of the country where the customers or the corporate customer are actually based on. So the difference in the culture, the understanding of how the business works could be challenging, so that some of the typology, some of the red flags may not be able to identify by some of the outsourced staff. But it doesn't mean that outsourcing is not good, just that I think, in my view, we have to focus a lot more to ensure the understanding gap is close or as close as possible. So the other two parts I want to cover basically is account takeover and impersonation risk, where actually many banks actually accept the authentication through core. And as you all know, we all have been submitting our applications for different kind of things, downloading our mobile app. So there is no data privacy in practical sense, although there is a data privacy rules to regulate it. So that when your data is everywhere, technically those fraudster or money launderer can actually get your data and take over your account. Let's say your account in dormant status, you may not be even aware of that. So those are the challenges and expectations from regulations that I would like to share.
So technology is now very advanced. What we have in place is that, for certain fintech companies that we work with very closely, they are aware of these challenges, and they definitely know that the regulators are coming in hard on fintech companies as much as they are more harsh on the banks, the traditional banks. So nowadays, when it comes to onboarding, fintech firms have usually an app, where their clients key in their particulars, and usually the process has to be very fast to onboard the clients.
The entire sort of KYC process and the risk-based approach. So. Of course, every financial institution has their own risk-based approach. And I think clients are beginning to kind of see that as well, because as they onboard across different banks and financial institutions, they do note that there is a difference in the KYC requirements and the arts. And sometimes they try to leverage that as a benchmarking tool to say that, but we're not getting the same kind of request from another financial institution.
So nowadays, technology is so advanced that, with databases, you can see who the parent companies are up to 10 levels, who the subsidiaries are. If there are any changes in corporate structure, it could be made known to you the very next day. If there is any adverse media on perhaps the shareholders, the beneficial owners, the directors, you can also get a hit, as in you can get a push notification instead of having to monitor it manually.